Dear guests, welcome to the last but not least session of the day, Toolkit 2024, Mastering the Regulatory Scene. As we progress towards 2024, let's have a look at what regulatory initiatives to expect and how to foster compliance. Please welcome on stage Sophie Gerber, co-CEO at Traction Fintech and Director at Sophie Grace Compliance, who will introduce her panel. Sophie, dear speakers, the stage is yours.
Thanks very much. Certainly not least, regulation's something that just is a constant in all of our lives, and it's certainly highly important. And even though we're at the last panel of the day, it's good you're all here to find out what the current themes are that people are seeing, particularly the esteemed panelists who have joined us from quite a good selection across the industry of people dealing with regulatory issues. So I'm going to get each of them to introduce themselves, tell us a little bit about what they do, a little bit of a snapshot of what they're seeing across the regulatory landscape, and then we'll dig into some of the current topics. So over to you.
Thank you very much. My name is Stelios Moiseos. I'm the Chief Compliance Officer of BT Suisse, a multi-license broker around the globe, offering CFT services to retail and professional clients. As Remonda said, we have a lot of regulatory changes coming up, existing ones, new ones, that need to be taken into consideration, especially when regards to the digital aspect. So we hope we catch a little bit during this panel. Thank you.
Hello everyone. My name is Alexandros Constantinou. I'm the Director of Compliance Services of S.Platis Group. I've been the last 15 years primarily involved in the provision of consulting on financial regulations. I'm very excited to be again on this year's panel talking about regulation. It seems it's always a hot topic. I don't think we will ever be able to say there is nothing new coming up. So thank you. Hope you enjoy it.
Press anything. Hi, sorry about that. My name is Alexey Drobyshev. I'm with Sumsub. I am a senior legal counsel in charge of litigation, contentious regulatory, and corporate affairs of our group. We are in the business of selling a set of tools and services for that deal with the compliance layer of life cycle for customers for various kinds of businesses, including trading, which is centered primarily around KYC, ID verification, transaction monitoring.
Thanks. Konstantinos Konstantinidis. I'm from FAI Comply. Been providing sort of compliance services, as it says on the box, since 2010. With regards to what we see coming up, I think most people have touched on it, the sort of globalization, cross-border consumer protection side of things, which I'm hoping that we'll get to discuss today.
Great. Well, let's start there. I think, Konstantinos, tell us a little bit about where you're seeing regulators putting pressure on firms lately.
Sure. So I'll just touch on that from sort of two sides. From the regulator side, what I just sort of said, the cross-border sort of consumer protection side of things, we're seeing, especially around complex financial instruments, regulators, let's look at France, for example, wanting X from different firms, the Czech Republic wanting Y. So we're seeing regulators really push for correspondence between themselves. And that's coming down and filtering through to the firms, which we're seeing take much longer when they're looking to passport their services and so on, because they have to meet not only the requirements of their home regulator, but their new requirements from other regulators and so on. And then from the client side, seeing a lot of people trying to go for this one hub, one ecosystem with PSPs, crypto, Forex, and then all the concerns around where does client money start and stop between the PSP and the crypto and the CFDs. And then Is there any regulatory arbitrage going on? And then the whole load of different risks from a whole different set of complex instruments.
Cool. And Alexandros, are you seeing anything different to that? And I wanted to ask specifically about these prop trading firms that have sort of come under scrutiny in the last couple of weeks. Is that something that you've had a lot of inquiries about, or people looking to change their model?
Yeah, I agree with Konstantinos on most of what he said. Of course, I would add only to that we see a lot of also some publications by regulators about gamifying and simplifying, oversimplifying financial trading, which is something they don't like. And I'm sure you also all read about Robinhood and what's happening there in the US, which I think is kind of replicated in Europe, and obviously regulators are exercising pressure to crack down complex product being sold in the mass market, really. Prop trading now, it's obviously a new thing. It's actually an old thing, but we've seen like a hype the last couple of years with a lot of new firms being emerging in Europe and elsewhere in the world. And we had this case recently in the US with My Forex Fund, which was one of the most, the largest, I would say, one of the largest prop trading firms in the world. And they've obviously messed it up a little bit. I think they've touched, supposedly the issue with prop trading firms is that you are not regulated and you try to not fall within the scope of the regulator. Some of the activities they've been doing, like taking deposits from clients and matching them to trade, has been probably fall within the scope of regulations. And of course, in some fraud type of behavior that they've been doing has caught regulatory attention. And I feel that it will soon come to Europe as well.
As in the model will soon come to Europe, or the falling apart of the model will come to Europe?
In essence, prop trading itself is not in Europe a regulated activity unless you are a market maker in a stock exchange. We are talking about pure CFD prop trading, which is most of what these type of firms are doing. Of course, some of them do some listed financial instruments on derivative. So in that case, they might fall within the regulation. But so in terms of prop trading on CFDs, let's say, you are not, according to MiFID at least, in the European, I don't know if there's any local rules in any specific EU country, but at least under MiFID, you are not regulated. So, and they hire basically the investors who they give their funds to manage, and they share the profit. So they are working on the basis of being outside the scope of regulation.
Yeah, sure. Did anyone want to add on anything about prop trading?
Just a little one. I mean, just expanding on what Alexandros said, when you're not regulated, you're not following any risk management regulations, you're not following any capital regulations, so you're liable for those things yourself. And that's essentially what we saw with Forex funds. They didn't have enough oversight, they were doing it themselves, and they folded.
Yeah. It's going to be an interesting space in the prop trading. And just the other day, there was someone who launched a similar service, one of the big brokers, and I thought that was interesting timing to do that and publicize that kind of model. So we'll see where it lands. So then I wanted to divert a little bit over to ChatGPT and large language models. I think most people here are working in firms. You have quite heavy compliance overheads and compliance costs, and everyone's looking to bring that down because it is a big part of the expenses of running a brokerage now. But implementing that is still in its infancy. I think there's potential flaws, but I wanted to ask Remonda and Stelios as well what they're seeing in their businesses and how that's going along.
Thanks for that, Sophie. Well, there's a lot of AI talks going on. I think we've been hearing probably the word AI and machine learning for the past probably 5-6 years at least. It's been a hot topic on the agenda. And you see a lot of providers instantly just putting AI on their pretty much product sheet and hoping to attract attention. But I think what the good thing with ChatGPT, if we're to focus on that, it's at least bringing about change, which I think is absolutely fantastic. We need more engineering around the whole space in digitization to actually prove to the market, to the regulators, to the participants that things can be done better and probably more intelligently as well. But of course, if we are to focus only on ChatGPT, we've tested it for sure in our product line. I know we've referenced earlier from Konstantinos about the cross-border elements of it, and of course what regulators are focusing on in terms of investor protection. And that area, there's absolutely nothing present in any of the ChatGPT, at least models, and that is highly complex. It's not something that you can feed it and make it understandable. Which basically means that if you are utilizing that in your day-to-day business, just be a little bit prepared. You might need an Alexey to come and help you with some litigation. So I think you need to be a little bit wary of it. But AI in general, compared to the Gen AI, that's been around for years. And you can probably apply a lot of that on the user interface side to aid the parts on your user experiences and items on that side as well. But I don't think it's something that I would personally rely on, although I'm excited, looking forward to see how it's going to develop. And for companies like ours that absolutely live for turning complexity into simplicity in the huge ambit of compliance, whether it's the cross-border elements, whether it's the KYC, AML, whether it's the risk that's becoming a huge focus point amongst regulators. I would say definitely there's a lot we can do in that space utilizing AI, but I'm not necessarily the first user of ChatGPT over our product line, that's for sure.
Thank you, Remonda. I think, and thank you for covering almost nothing much to say actually, but in terms of, I would like to add that from the side of the regulator, this is, they see this as with favoritism. They currently, at least under ESMA, they are trying to understand what it is, how it could be used to refrain the big data that we are coming across and the different regulations that we have against us. So one thing to add is the regulatory side. But again, we need to go a long road in order to understand how we could introduce it for compliance aspects. We in B2C try to utilize to an extent, but on a more guided way, more structured way, in order not to overpass regulation. So yeah, that's more or less.
Okay, and moving on to crypto. So I wanted to get a sense really from all of you on the panel. Are you still seeing it as a thing that's present in the market? Because we certainly had this phase last year where I thought crypto was over. I thought that this FTX guy is going to prison, it's dead. Finally we're done with this. But you know, it's still going. There's still crypto firms here. People still want to take crypto payments in their business, and presumably because people want to pay with it. But then there does seem to still be banking resistance to cryptocurrencies. Binance has just left Cyprus. So I'm interested to hear the crypto story, maybe starting with you, Alexey, and what you're seeing from that regard.
Right, right. Well, crypto is definitely not going anywhere. It is, in fact, getting, I'd say, unevenly, at uneven speeds, but it's getting more and more, or heavier and heavier regulated as in a manner that's very similar and very, very close, almost identical. In fact, it's often cut and pasted to conventional financial services, especially when we're talking about centralized exchanges. Decentralized finance, you have an extra layer or 5 of complexity that has to do with it being decentralized. But at least insofar as we're talking about centralized, as far as we're talking about centralized crypto, we are looking at basically a number of countries, jurisdictions, where it's just outright banned, still usually used, but banned. And we are looking at jurisdictions that regulate like they regulate as if and regulate with a view to welcoming and regulating crypto, making sure that consumers are protected, that investors are protected. This is their primary concern, that it's not used for money laundering, that the financial system is protected from illicit funds being funneled into the financial system through crypto, which is where the banking resistance comes in. That's absolutely a thing. I don't know a single place, a single jurisdiction where that would not be a thing. In those jurisdictions, which is, I would say, the majority of jurisdictions, we are definitely looking at the increased strictness of either regulation or occasionally standards and guidance on the level of attention to consumer protection and to good housekeeping, because that's what executing compliance policies ultimately is about, good housekeeping. We are definitely seeing that. At uneven speeds, some are more heavily regulated or at quicker speeds, the EU obviously. Some are not so much, but we are getting there globally. With the caveat that like many other layers, many other industries or areas of regulation, it's kind of structurally similar everywhere. In the sense, the trends, they're the same, but it's localized, and it gets more localized in the sense that there is some granularity on the details, which can sometimes be significant, even if, again, the rules in their architecture, of their structure, of their policy goals, even if they're very similar on that end.
Konstantinos, are you seeing a lot of applications still coming through? Certainly my experience in Australia is we're still getting a lot of firms wanting to set up a cryptocurrency exchange on a small scale or a large scale, and they want to get into the market, but they struggle getting bank accounts in Australia. So I'm interested to hear what you're seeing over this side.
We are still seeing a flow of people wanting to become regulated, and it sort of echoes what discussed earlier around the sort of group and wanting to provide that separate asset and expand into other services. Now, in Europe, if you want to provide services across the EU, it's not similar to the electronic money or payment institution or even the investment firm side of regulation. Is you need to go and get registered in every individual country. So slightly more arduous from that side, but the registration process is much easier. So we are just sort of seeing a lot of people wondering where to decide to set up rather than stopping the flow. They're just understanding, okay, where's the best place for us? What's our capital, for example? What sort of substance do we want to have? Where's easiest for us to go? And then follow the process. I remember last year with Alexandros, we discussed that they were assisting quite a lot of firms to register across the EU. So it's more not that we're not seeing any flows, just the discussion of where to go, where are your target markets, what substance do you want to show, and so on.
Do you want to add something, Alexandros?
Thank you. It's funny because, a lot of crypto firms feel the pressure on the product and at the same time want to move into other financial instruments. And then you have the CFD firms who also feel the pressure on the product and they want to move to crypto. So it's a bit of a weird situation, I would say. And there's also the particularity of the current. Obviously, we had the FTX event that kind of was a bomb into the industry that and has limited the hype that was on crypto, together with the price fall that we saw on a lot of the crypto assets. So and also we see Binance being chased by SEC and some other EU regulators finding them, even though they are regulated in Europe. And at the same time, we see the EU voting for MiCA, which is the markets in crypto assets regulation, which legitimizes the product and the services, essentially. Obviously, MiCA doesn't regulate the entire crypto space. There's still quite a few things left outside, like some of the NFTs, etc. So we have MiCA, which is supposed to become live for stable coins in June next year, and for the rest of the things that it regulates in December next year. So it's quite interesting to see how that will develop. So, I mean, you mentioned banking. Yeah, it's true that now if you open up a crypto exchange under national rules, you'll probably face a lot of banking issues, right? Or even as a traditional broker dealing in traditional finance and wants to, let's say, add a crypto service. His existing banks will probably close them down just because they're affiliated with cryptos. So it's interesting to see when the first MiCA licenses will be issued, how all these will work together. I mean, will the banks create an appetite to serve this, or they will still face the same situation? So these are a lot of good questions that people discuss and wonder how things will develop. But definitely, I mean, crypto is here to stay one way or another. It will exist. Whether it will become so mainstream is a question to see in the future, but it's not going away for sure.
Yeah, I noticed in the EMIR refit fields, which you'd be quite familiar with, now they've sort of legitimized or acknowledged cryptocurrency derivatives. But what I didn't see in the MiCA was that you had to report, say, direct cryptocurrency transactions. They haven't actually asked for that. Is that your reading of that? Sorry to put you on the spot with that question.
No, it's fine. I think there is another regulation for reporting crypto payments in Europe. I don't recall the name now, but there's a new regulation also called Sumsub, which will capture payment and EMIs and banks who conduct cross-border payments within the EU. So there is another equivalent one for the crypto asset providers that will have to report certain transactions. Obviously, you have also the travel rule that was introduced together with MiCA. I mean, I have a Revolut account, and I think last week they sent me an email about the travel rule that now will start to apply. So anything I do on crypto now will be shared with the payer, between the payer and the payee company. So I think there will be, there isn't the equivalent of MiFIR reporting in crypto, but there are some reportings to capture for tax evasion and AML purposes.
Well, that's a start anyway. Did either of you want to add anything on crypto?
I think the team here said quite a bit and good stuff, but I think in terms of course, MiCA will hopefully create much more transparency over crypto, and at the same time moving from the registration to the regulated institutions under these ambits of crypto will hopefully make that even easier. But I do still feel that there's no doubt crypto is here to stay, but I do feel that the banks need better education around it. One of the biggest problems really in this space is a lot of banks, they don't want to understand it, they don't want to really assess the risk, and immediately they just either terminate some accounts, or not even after maybe a firm like yours spends 2 years going through applications, and then you find out at the end of the application you can't even get an account. That's an absolute nightmare situation for a lot of these institutions. And I think I'm hoping the regulators are beginning to learn a little bit better of how the market is leading in this space. And even though we're still seeing crazy stuff happening in Spain recently and stuff like that, and I think that's one of the biggest problems, is the regulators need better people coming into their pretty much infrastructure and trying to actually get them to understand the market. And then based on that, I'm hoping better guidelines would come out. And I'm also hoping out of that, we will have much more clearance to the banks that are really right now just, if I don't understand it, I'm just going to seize it. It's that simple. And that's a problem in the space.
Do you want to talk about crypto? We all want to talk about.
Well, I'm watching also the timer, but I think most of the guys, they have covered the matter. Just to emphasize the banking education as well, it is important. And it's a bit contradictory when, for example, in Cyprus, we have SAISEC regulating MiCA and accepting applications. At the same moment, the central bank is not even getting discussion in regards to crypto. So,
Look, we don't have enough time to keep talking about it. I can tell you I have views on banking and crypto and debanking in particular, and I give that opinion away for free later today if anyone wants to hear it. So just come up to me. I love talking about debanking. But the final thing we wanted to cover today was data protection, and it's a big topic that's touched by a number of different things. It's covered by cybersecurity, it's covered by GDPR, there's outsourcing providers, regulation around third parties that firms engage with. One of the things that I find for myself and for my business now is asking, why do we still have this data from 10 years ago? Why do we have this client's file? Why do we have these transaction reports? Do we need them? Are they putting us at more risk and more exposure by keeping it? Should we just purge it and get rid of it? So if someone hacks us successfully, which we have good cybersecurity systems, but you never know, is it better just not to have it? So what's the reason? And so I was going to ask our panel members what they thought about that and if they're seeing a move towards sort of data purge, data deletion. And
in our part of the world,
yes.
you can actually hold it. I'm not a GDPR expert, let me add that, but definitely you can't keep it beyond the purpose. So I think, but I understand in different parts of the world, there are definitely different applications around that. Absolutely, I mean, we're all in favor of data deletion when it's not necessary. And in fact, as individuals sitting in this room, I think if anyone ever asks you for your ID or anything confidential, and there's no way of you sending that over some sort of encryption keys and so forth, you should just say, no, sorry, we can't do it. So I think it's really, really important that we, as people, understand the value of our data, and it's really becoming quite important to actually see how your data is being transferred, held, and as you mentioned, if you get an attack, where's that data going, and to whom? And that's really a chain of events that none of us in this room would like to be part of. We believe strongly, in fact, since we're on the topic of digitization, that ultimately in the future, a lot of our ID would be sitting really in a tokenized manner where you can just open it and close it for the purpose that you are actually sending it for. And of course, the institution has an obligation to keep your data for the period they need it for. And beyond that, they actually have an obligation, at least under GDPR, to get rid of it. But of course, there are many issues around it, and I think the world is going to shift, and I think it's going to happen faster than we think. Even though, you know, we're discussing crypto and what's happening there, fast forward a few years, this will be an irrelevant topic because that just has been taken care of, and then we probably start moving more towards how is your data. Now we have regulation controlling it in pretty much every corner of the world. The next will be, is your data actually shouldn't be sent in the way it's sent today. It's probably going to go through many different avenues and forms, and there the regulators will come again into the space to try to identify how do we now control that. And there'll be new regulation around that. So unfortunately, it's one of these situations we'll always be playing, you know, catch the next thing as it happens. And it's a shame we can't become more predictive in what's going to happen in this space, because you can actually see the pattern, I think.
Yeah, I mean, you say don't give it, but when you go on a holiday, you go down to Italy somewhere, you're in the back of Sicily, it's 10 o'clock at night, you need to get into the hotel, you know what? Nonna comes out and she says, you have to give me your passport. What are you going to say? No, you can't have my passport. She goes and scans it, and she still has it somewhere in an old laptop sitting on a shelf.
But imagine if the entire world does it like that, then they will force change. And then you will end up having pretty much a more uniform way of being able to share your data, because you have no idea on holiday where that data is really going. And that is a problem. And that's definitely a huge problem.
It's definitely gone to a lot of people that I don't want to have my passport or my signature, but it's gone now.
I mean, I can, from what Remonda is saying, that we're seeing regulation follow more data protection. So you had GDPR come in a few years ago. more recently, we had the European Banking Authority start to look at cybersecurity more seriously. I think they sort of identified that there's huge systemic risk that could come out of problems with ICT. So now they want to bring the European Union into and harmonize not only investment firms, but also payment institutions and so on, credit institutions. The European Banking Authority guidelines cover all these institutions to bring them up, obviously with proportionality. You're not going to ask the wealth manager with 5 clients to implement the same things as a bank. However, we're seeing a lot of that come in, and it's something that actually the SISAC has asked the internal auditors to go and assess this coming year and look at internal governance, business continuity, organizational structure, outsourcing. So we are seeing people take action to look forward and protect secure people. Yeah.
To add to what Alexander is saying, it's of course it's a recent, not recent, it should be
Alexandros is a good guy, but Constantinou.
Sorry, Constantinos. The EBA guidelines issued in 2019 actually, and we have SISAC applying those currently. While in the same time, the ESMA regulator is in the process of introducing the DORA Act, which is a digitalized operational resilience matter that is going actually to provide a tool, at least for us as compliance officers, when it comes to the positions to KYB, the service providers, to have a tool to verify that the information received back and forth, it's secured in some way, which is an important aspect. And of course, what Constantinos said in regards to providing safeguard at least to a level in the company, because we will be a step behind the hackers of stealing data, and we will keep updating our rules and procedures. It's something important to have, and something important that we need to place emphasis, and we need to educate personnel as well.
I was watching another presentation actually earlier today, and they mentioned an interesting statistic that firms who are transparent and clear with their clients regarding their personal data get 40% more loyalty. So it's obvious by this that users and customers care a lot about personal data. I myself, for example, I'm worried, as you mentioned. The technology exists though to overcome the challenge that you mentioned, where you went to the hotel and you needed to show the ID. At least the technology exists. And actually, there are even regulations in Europe about this. You have the EIDAS, which is the Electronic Identity Authentication System, where your ID is already digitalized, and you can verify the person by scanning the mobile app that you have on your mobile, and it will verify that it's you without the other party needing to hold the data. Just a signature that indeed this person was verified. We even have it in the AML legislation in Cyprus. You are allowed to verify the identity of a client using this kind of technology. So it's also a matter of the companies and people. I mean, I even see people nowadays still with paper IDs. I mean, not the plastic one, paper, old-fashioned. I mean, if people don't really adapt to the digital world, obviously you'll face situations like this where we need to use the traditional methods of doing things. So yeah, but it's a big topic. I mean, we can talk about it for hours, but I think guys cover a lot. I don't know if Alexey wants to.
Yes, unfortunately, we don't have the time to talk about digital IDs, although it's its own kind of worms. Understandably, everything is getting digitized, and that includes ID, especially in Europe, because many countries have rolled out not fully. There's a different degree. The degrees of penetration are different in different EU countries, more so in the Baltics and the Scandinavia, less so elsewhere. But still, it is being rolled out. It's a thing that is happening in the framework of trust services and the EIDAS regulation. Still, we are a long way. Remember, we are the world is not just Europe. We are a long way globally from fully digitizing our IDs, and we are still going to be for quite a while, especially those of us who operate globally, we're going to keep relying on users sending their vendors, their service providers, their data. There's no way around that at all. And I would say on a bird's eye view, the best things we can do in order to both ensure trust in how we, and including us, like we handle the data for many of the firms here. The best way we can ensure that is by being transparent. Got to echo that. By following not so much regulation, because regulation deals more with the purpose and with the consent, with the procedural aspects of it, but with cybersecurity and, again, good housekeeping process standards and guidelines that are usually expected by data protection bodies to be complied with. And you need to keep abreast of data protection laws, unfortunately, across the globe. Basically, wherever you process data from, you gotta know the rules. There are cases where it might not be straightforward to act in a manner that is compatible with all data protection rules everywhere. As there are different types of personal data, different regulatory regimes. In particular, like usually we stick to GDPR, to the GDPR as the baseline structure, but it doesn't work like that always, especially if you're dealing with North America. So that can be an issue, and we have around 40-something seconds left, so I should shut up now.
No, I mean, the benefit of being the last panel of the day is we can go a little bit longer, I'm sure. So I was going to throw to the audience to see if anyone wanted to take the opportunity to ask a question, whilst you've got 5 very esteemed people up here. The microphone's ready to jump on whoever wants to ask a question. Okay, you all just want to go and get a drink somewhere, which is totally fair enough. So I don't want to be the person standing in between you and the drink. But certainly take the opportunity after the panel to speak with any of the panelists or speak with myself. As you will have seen, there's a great depth of knowledge and understanding. Some of us have been coming to these expos for quite a long time and have seen different evolutions of regulation. So we've got a lot of knowledge behind us all, and we're happy to share it with the industry. And I'd just like to thank you all for participating in the panel. One thing I'm going to take away is that I'm going to filter on hotels.com for this person who can electronically identify me moving forward, and only go to those hotels and not hand out my passport. So amongst all the other beneficial things that we've learned today. So thanks very much.
Thank you.
Thanks, everyone.